right, hello everybody. Welcome to the Trader Continuum live broadcast. I am Wes Walton, and I'm more or less here by myself today, but that's just because, well, I'm talking about robots, and I'm also going to be talking about Forex stuff, and from here on out, it's going to be more like Gordon is going to be on the show a couple of days a week, and we'll also have several other experts who will be contributing to the show. As well as a Monday morning show, which is going to be a market open type of a thing that's going to involve a couple of our experts. And we'll send out more information about that as we have it. But for right now, we're going to be talking about Forex, some trading robots, and some other pretty cool stuff that's going on. We will be starting with, let me make sure I can bring up the chat here, because anyone who would like to participate in the show, you are more than welcome to call in or text in or whatever it is you'd like to do. We've got the phone number right there on the bottom or at the top of the screen if you're viewing this from Trader Continuum website. If you're viewing it from somewhere else, then I am more than happy to put the phone number up on the screen. Let me bring that up and make sure that I've got all of this opened up just in case, because I definitely want to hear from anyone and everyone who wants to be involved with the show. And let me get the phone number up here on the chart. Let's see here. There we go. Let's see if I can bring this up in a way that will be just a little bit easier to see. That won't be easy to see. I'll make this that color and take away the shadow and the border. Let's shrink that down just a hair. All right, there we go. Now you should be seeing that come up. There we go. Right down here at the bottom of the screen, just right over there, bottom corner. That's the phone number. If you want to text or call during the show, you're more than welcome to. I love the feedback. If you call, just expect that you will be on the air. And if you text, then I won't, use specific names or anything, but I will read your text message right here on the air as we're going. And also, there is a chat feature right here inside of live stream. If you are interested in chatting during the show, you can chat with me directly, or you can just chat with others. And the chat function doesn't require any type of login or anything like that. You don't have to register. You just have to type in a name. That could be a real name or a fake name or whatever you'd like it to be. Let me open up the chat, make sure I'm here. There I am. You can join the chat as a guest. I'm going to join it as Wes. And there we go. I've joined the chat as Wes. All right, welcome to the show, everybody. Now that we've gotten some of that stuff out of the way, let's go ahead and start taking a look at some things that are going on in the Forex market. And also, we're going to start looking at some robots. So I'm going to mix them up just a little bit. We'll be looking at a couple of Forex pairs really quick, and then we're going to move on to looking at some robots, and then we'll jump back over to Forex. If there's anything that you want to see while we are doing this presentation, while we're in the middle of this live broadcast, please let me know. Text message, chat, whatever it is you want to let me know. Okay. All right, let's go ahead and move on. I'm sure everyone is anxious to stop seeing my face here. Let's go ahead and bring that up and auto. There we go. Okay, so usually whenever I'm looking at Forex pairs, I like to look at Vantage Point software as one of the very first things that I do. And for this particular broadcast, I want to talk a little bit about the US dollar, Canadian dollar. Now, we had made some predictions on some currency pairs last week, and most of those turned out pretty well. We are still waiting for the British pound US dollar to create another trough in price. We have these troughs here, which is great, but we don't have a trough or a reliable trough in price on this side. So we're waiting for the British pound US dollar to actually finish its divergence up. And once it finishes its divergence setup, then we're going to be looking to place a trade. But for right now, we are still waiting, which I understand is a little bit frustrating, but we'll just keep waiting. Now, the US dollar Canadian dollar I actually did want to talk about, because the US dollar Canadian dollar is showing some pretty interesting setups at the moment. And I wish I had looked at this last night, but I did not. And I only looked at this chart when I saw the divergence set up. Now, with Vantage Point, it's end of day data. So it's not live data. You wait until the end of the day. And when we're trading a daily chart, we really want to wait until the end of the day anyways. So Vantage Point is saying that we are looking for a bearish day on the US dollar Canadian dollar. And we've been seeing price go up with the neural indicator going down. Now, normally you wait for a couple of troughs or a couple of peaks in order to make a determination about divergence, but in some cases, well, especially in this particular case, and I'll show you why here in just a moment, but in some cases we can ignore the I don't know, rule of thumb that you wait a while before actually looking for a setup based on divergence. But we're actually going to we would have foregone that, which is very disappointing. But I want to show you this setup anyways, just because it's rather interesting. Let me bring up my other computer. I don't know why it's not on here at the moment. It should be. Let's see here. All right, well, fine. Let's go ahead then and just bring it up here on this chart instead. Let's see. And the screen should have just gone blank. And now we will bring up. There we go. Awesome. Let's bring up a chart. US dollar, Canadian dollar. Now, the reason why we are more or less ignoring, or would have ignored, this is very frustrating. Last week, we were looking at these two peaks here. This one, and even these over here to some extent. And when we had talked about a setup happening on the US dollar Canadian dollar, I had mentioned that if we broke above the highs of these prices here, where we had this nice big peak, if we broke beyond this, then we would be trading up to the tops of these peaks, which doesn't look like a whole lot. It's 29.50 up to 30.13. So it would have been like 65 pips if we were in that. I was in that, but I got out of it once we had hit just a little bit above this peak. And, well, that's why I started looking for divergence in the opposite direction. That's also why we would have basically ignored the general rule of thumb that we would want to wait for a series of candles before getting into a divergence trade. On Vantage Point, we were going up in price when we had just gone beyond this peak right here. Let me put a circle around that so I don't have to keep referring to it in this way. Let's see, we want drawing functions. We'll take an ellipse. There we go. Oop. That peak right there. Okay, so this peak right here, I traded up to just a little bit beyond this peak, and then I got out of that trade because I assumed when we got up to these peaks we would have a reversal, because that's what we've been doing. These nice little peaks and troughs that we see on this Trader GPS ATR indicator mark places where the market will come up to and either reverse or close at and then trade beyond. That's what we've been doing for the past several weeks with our setups. Even on stocks, we've been looking at that same occurrence where we will go up to some of these previous peaks and then we will reverse back. That's why we don't mind foregoing the normal, well, we had this number of candles and we had these two peaks. Instead, we were going up in price. We got out just a little bit above that peak. and we were looking for a reversal, and well, this is a perfect setup for a reversal. We were going up in price and we were going down on the neural indicator. Now this is not a normal divergence setup, but it is still divergent from the indicator. And that's the point. So Vantage Point saying that our day is supposed to close bearish, and unless something really freaky happens, we are having a bearish day today on the US dollar, Canadian dollar. All right, I'm gonna get rid of that circle. And now we're gonna take a look at some robot stuff. Hopefully that's interesting to everybody. If it's not interesting to everybody, if you don't care about robots, then you should be saying something, because we have a phone number. Oh, the phone number's not down there. Hold on. There we go. Phone number down here at the bottom of the screen. Down here, there we go. Down at the bottom of the screen, bottom left corner of the screen, you can see the phone number. You can call or text in during the show, and I will either read your text message here on the air and answer your question, or if you call in, you should probably expect to be on the air. Or you can use the little chat function, which is right there inside of the live stream box. It looks like a little conversation bubble. If you click on that, then you can use a guest chat account. It's not even an account. You just put in your name and then you're done. And I'd love to hear from anyone who is attending live who would like to see something other than robots. If not, I'm just going to keep talking about robots. Okay. So first of all, we built 4 robots on Monday, and I've been playing around with those robots a little bit, and let's go with the, I called them the barbecue robots because that's what I called that series of webinars. So the barbecue morning robot. As you can see, it's a relatively simple robot. It's just a fast moving average, a slow moving average, profit target, and stop loss. That's it. There's a few other little tiny pieces of the robot, but I really don't think any of the additional stuff is consequential. If we look down at the source code, there we go. We have a crossover of the slow and the fast EMAs, and oh, look at that. It's an EMA and an SMA. Sorry. We have a crossover of the slow SMA and the fast EMA, and then we have also a close of the close of the price is greater than the faster MA, and the close of the price is greater than the other the MA moving back one more candle. So this is the robot that we built Monday morning, and this is how it tested out. Obviously not terribly swift on the first try. So what we did was we started playing around with it, but then we ended up moving on to a different robot. We started programming a different robot because this one just didn't seem to be testing very well. Ooh, okay. But we didn't have a chance to test much, so we are going to go ahead and test some of it right now. I've already done this test, so I already know what to expect through a lot of this. Let's see, that is 100,000 contracts. We only want 10,000 contracts. On TradingView, they go by contracts. So it's not the same as like MetaTrader 4. In MetaTrader 4, you would be looking to trade like 0.1 or 0.01 for mini lots and micro lots, etc. This one is a little bit different. On TradingView, it's contracts. So 10,000 contracts is a mini lot and is approximately $1 per pip, depending on which currency pair you are working on. So give me one moment. Let's recalculate after order filled. Okay, let's go back to inputs. I'm gonna press OK really quick. Now, if we take a look at this, this doesn't look terribly bad, although we did net a loss, and our drawdown was actually higher than our loss. We had a 42.86% profitable trading system. So technically, we might think, well, let's just raise the profit target and lower the stop loss. And since it's profitable in that way, it's profitable 42% at the time, which is actually fairly decent for a trading system, then maybe we can get this thing profitable just by messing with the profit target and the stop loss. And we're going to get to how to, well, we're going to talk a little bit more later about how to find or how to determine whether a system, a trading system, whether it's robotic or discretionary, is a garbage system. All right. So let's change the profit target first. And what's really cool about TradingView is that we make changes to things and we can see it immediately reflected right here in our backtesting results. So yeah, changing the profit target actually lowers the loss that we took, the net loss. And there we are. We are finally into a gain. 42 cents. Wow, look at that one. Now, if you're interested to know, our trades go back to 2004 on this currency pair. Meaning in 14 years, we made 42 cents. That is not swift. That is not good times. That's an indication of a bad trading system when you've only placed one trade per year on average, and you netted 42 cents. I don't care how much you increase the trade size, that 42 cents is never going to amount to anything, especially with a $16 drawdown. Okay, so maybe we want to keep going up with the profit target. I'm going to go up fairly quickly now. And we see that the net profit is still rising. Oh, we just dropped back down. So we went from $14.46. We go up one more pip, and we drop $10. That is not a stable system. What this means is we went up to 92 cents of profit on, let's see, if we go back down. Yeah, we went up to 92 pips of profit on like 1 or 2 trades, and then it reversed before making it to the 93 pips. So let's go back down to 92 pips. This is not a stable system. You can't think, oh, well, since 92 pips worked, then we just will stick with 92 pips. That's not actually how this works. But we can test out some other things, like our stop loss. What if we reduced our stop loss? Now the profit is rising, the profit factor is rising, and the drawdown is shrinking. So that's a good sign. It's a good sign that lowering the stop loss is actually helping this system to perform better, which is kind of cool because now we're at only 27 pips of a stop loss versus 92 pips of profit. So now we're kind of leveling out. We don't have quite as much profit as we saw just a little bit ago, but look at our profit factor. Our profit factor has gone up to 5.03, which is pretty cool. Let's take it down to 10 because that's a nice, easy round number. 10 pips of profit to make 92 pips, or sorry, 10 pips of loss to make 92 pips of a profit, right? If we go up to 93, that reduces us quite a bit. Because again, one of those trades went up to 93 or 92 pips of profit, but then reversed and actually was a loss. So if we keep going up, then we'll find out how many other trades we only barely won on. It seems like everything else went into profit pretty quickly and did pretty well. Yep, still going. Move a little bit quicker here. Okay, so instead of going up by ones, let's try just putting in a different number. 200 pips. And we dropped. So obviously somewhere between 170 and 200 pips, we actually lost a couple of trades because our percent profitability went down. So what if we just took us back down to 170? We'll stick with 170 for right now. All right, now that we've gotten a little bit more figured out about the profit pips and the loss pips, our profitability went down about 10% actually, or 7%. But our profit went up and our profit factor went up, and our drawdown, well, stayed the same pretty much because we didn't change the stop loss any. So now we're going to start messing around with the fast moving average, because let's face it, 14 years placing 14 trades and making $71, even if you increased it to a full standard lot, that's only $710 over the course of 14 years. That's not fantastic. And using a full standard lot is rather dangerous if you're working with even with a $10,000 trading account. $10 per pip is kind of yeah, that's kind of risky. So now let's start messing around with our moving averages. And what happens if we start moving up? Well, look at that. Our profit factor has gone up, our percent profitability has gone up, and we've only gone up 2 points or 2 periods on our fast moving average. Let's keep going. So the profit factor dropped a little bit, but our actual profit increased. Our drawdown increased just a little bit as well, and our percent profitability has gone down since our 16. So if we go back down to 16, you see this. We were 40% profitable with a profit factor of 11.5 and drawdown of $3.60 with a profit of $81.90. So it looks like 17 is the highest we've gotten with a profit factor, which would be the amount of profit we got and the percent profitability and the drawdown all kind of meshed together. We go up just a little bit more, and we are down to 17, or we have 17 trades. We're up to $95 profit, and I'll just keep going because it's more interesting when you do this a little bit faster. So then we get up to 21 as a fast MA. Our profit factor has gone up to 11.299%. Profitable is 42.42. Our max drawdown is $7, and our net profit is $176. That's pretty cool, right? Obviously, not very cool for 14 years of running a robot, but it's not terrible. Well, okay. Yeah, $176 is pretty terrible 14 years. But as far as our drawdown versus our total closed trades and our percent profit, all that stuff combined together kind of looks relatively nifty on a robot. Okay. Now we just got up to the point where we have the same fast moving average as we do slow moving average. But remember, the slow moving average is a simple moving average, and this one is an exponential moving average. So there is a little bit of a difference in these two trades. Now, it's not really a whole lot of a difference between the two moving averages, so gosh, you'd be looking at getting in trades just randomly almost. But apparently it picks some pretty good random spots because we have a nice profit factor, and our percent profitable is 1/3. So 1/3 of the trades that we place ends up being profitable. Let's keep going up. Now this is contrary to pretty much every system that we know, because the fast moving average all of a sudden is becoming, it has a larger period than the slow moving average. Normally, the slow moving average has a larger period because you want it to be more gradually changing its course. Whereas the fast moving average, you want it to be lower because you want it to change faster. Well, so now we're just going to keep going up. And now we start seeing a lot wilder fluctuations in the number of trades, the profitability of those trades, the profit factor, and all that stuff. Now it seems like everything's more or less leveled out. So let's see if we can get up to the point where we are back to being at a loss. We're averaging quite a bit lower than we were now. $35 profit, 16% profitability. Keep moving up. All right, 200. We're going to stop there at 200, and now let's go back to the slow moving average, which is now kind of our fast moving average. And instead of a crossover, we're doing a cross under. Kind of weird, right? Now we're seeing huge fluctuations because every period that we change on this moving average is a pretty big change as far as where the moving average is in relation to this 200 exponential moving average. We'll keep going down. No data for a 2-period moving average. Okay, well that's cool and all, but what if we, now we're going to, let's go back up to where we were. How about the, I don't know, just find something that looks decent. How about a 9.56 profit factor, $212 profit, and let's mess around with the profit pips again. We go up quite a bit in profit, and well, didn't really affect much going on here, so that isn't a bad sign. Profit went up, percent profitable went up, and our profit factor went up. And there we go. So we had, with a 1,000 pip profit target, we had one really good trade, and then we had 43 bad trades that lost $10 each. Granted, we still netted a profit, but we only had one trade that actually went to a 1,000 profit target. I actually wrote out some of the settings that I liked: 96, 14, 140, and 10. So on the Euro US dollar, over the course of, let's see, what's that, 15 years, almost 14 and a half years, it made $521 of profit, took 79 trades, it was 50.63% profitable, and had a profit factor of 14.359. Now that all sounds really cool and all, but remember, this was 15 years to make $521 of profit. Even if you increase to a 1 standard lot trade, this would only be $5,210 over the course of 15 years. That is not very fantastic. So there are a lot of things you have to do to change around the system to try and make it more, I don't know, conducive with your own trading system, with your own trading style. This is probably a better system to work on a smaller time frame chart. So we're working on a daily time frame, so if we change that down to a 60-minute time frame, then we placed 199 trades total, and it was only 9.55% profitable. We'd have to change the profit target around because obviously we're not going for quite as many pips of profit, and we'd have to change the stop loss around as well. And I haven't actually worked on any settings for a 60-minute chart. All right, but now let's talk about what it means to find a garbage trading system. And I hate to say it, but I'm going to use this exact trading system here to show how you find a garbage trading system. Because, let's face it, this one did not perform as well as what we would want it to. So I'm going to change these back to the settings that I had before. There we go. On paper, these stats don't look bad. However, how did I get to these stats? I want to tell you what it means to find a garbage trading system, and I also want to tell you what it, well, maybe some of the myths surrounding backtesting and what it takes to get a good trading system and some of the changes that you have to make in order to make a good trading system, because there are a lot of misconceptions about good trading systems versus bad. There's a lot of misconceptions about back testing. So let's just stick with how to find a garbage trading system first. Now, if you remember, when we were changing the settings around, we saw some wild fluctuations in the market, or in the number of trades that we're winning and how much profit we were making and all that stuff. So if we play around with these settings, we go up. We don't see too many wild fluctuations, but we do see some fluctuations. We went up, now we've gone up 20 periods on the moving average, and we have lost over $200 of profit. And we went down, we dropped by 11% profitability. Yeah. So just going up a few points on the moving average ended up dropping us a whole bunch in the areas that we actually want to see some increase. So let's go back down to 96. Let's see if we can hear what's going on. Hello.
Hello, Wes. Hi, it's David McEwen. How you going?
Yet. Give me one moment. Let's see here.
Hello.
That's why we need to change sound settings. We need to go to playback, headphones,
Hello.
set default. There we go.
Testing.
Hey.
Testing 1 2.
Can you hear me?
I can hear you very clear. How are you?
I'm fantastic. Hopefully everyone on the show can hear you as well. I don't know if you were watching live or not, but
yeah. Look, I'll introduce myself. It's David McEwen. I've sent you a few texts and left your voicemail some time ago. Look, this is the best for me anyway, until I watch the playback, because the what do you call it? The bus off a mobile.
Oh yeah.
Phone. So that's I don't know if that can be improved, but it doesn't seem to be working too well. It just cuts out every few seconds.
Right.
Anyway, very laggy. Look, wanted to show you some, I guess, pictures and data and so forth on what I've been doing. And you may recall I messaged you about in one of the channels about having multiple rollovers.
Right. Well, would this be a better call to have after we get done with the live broadcast?
Probably.
Okay.
Yeah, sure. Look, it's something for another session, probably. To work on just that topic. But yeah, look, I thought I'd just give you a call, see if I get through, and I did.
Yeah.
Work, and I am.
Well, that's a testament to everybody, I suppose, that we are actually live on this show, and we take phone calls, we take text messages and everything during the show. And David, if you'd like to call me in about 25 minutes, then you and I will talk through some of the rollover stuff. Yeah, we'll talk through that.
I'll call you in 45 minutes if you like, give you a bit of extra time. It's 6 o'clock here, AM in Sydney at the moment, so if anyone's trying to guess my accent, it's an Australian accent. But anyway, hello to everybody, and yeah, look, I look forward to having a chat, and hopefully I've got something to add to the group and add to our success.
I think you will, and we'll plan a time for you to call in, and we'll discuss all of that stuff on a live broadcast coming up in next week or so. And for right now, it'll just be me and you talking, and it may take quite a bit of time to go through all of the data And
Yeah.
so
I
I
do apologise.
no, it's no problem.
I can't actually see it because of the buffering, and I've literally just finished work 10 minutes ago, so I was thrilled to be able to make it live rather than having to watch the replay. But,
Yeah. Well,
it's nice to connect with you finally, Wes. And
yeah.
Yeah, I'll give you a call in a half hour.
Cool. I'll talk to you soon. Thanks.
Thank you, and thank you for your service.
Yeah, no problem. All right, bye for now, man.
All right. Thank you. Bye.
All right. Well, that was cool. We had our first live caller, and I've been talking to David McEwen for a little while now. Actually, I've known him for years through, I don't know, more professionally, I suppose. I've never met him in person, but David McEwen and I are going to be working on adding some additional rollover type trades to some of the robots that we have available on the robot continuum. And that was actually fortuitous because I have been looking for a way for everyone to realize that this is a live show and that we do take live phone calls. And anyways, so we'll get back to the stuff we were just talking about, and then we'll move on to a few more Forex and stock charts. Okay, so moving around with a moving average, it's kind of funny sounding. Moving down on the moving average and moving back up, we see that price actually, the amount that we make in profit and the total trades closed and the percent profitability, profit factor, all this stuff is changing, not necessarily wildly, but it is changing. Now that's not necessarily indicative of a garbage system. Seeing it change just a little bit here and there. Seeing it change wildly as you make one minor modification, that is indicative of a bad system. So on the fast moving average, for instance, we change the fast moving average from 14 down to 13, and we lose $100 of profit and 10% profitability just by changing one. Go down one more, we lose another, wow, even more on profit, and we lose another 10% profitability. Let's go down another one. Then we go back up. We go back up by, what, $70? And we go up by 6% profitability. Let's go down one more. And that's a little bit better. Seeing it only change by, you know, $40 of profit and 4% profitability, that's not fantastic, but it's also not the worst. Go down another one, and now we're starting to level out a little bit. And we're not seeing as drastic of changes. So what does that actually mean, though? What that means is you are probably more likely to see these types of results in your trading with this robot, as opposed to these exact settings. 96, 14, 140 pips of profit, and 10 pips of a stop loss. And if you see exact settings like this, and if you are to make one minor change, and all of a sudden the entire system is thrown off, then that's a garbage system. The best way to find good settings for a trading system, especially testing a robot, is to find where it averages out. And that's not what these settings are. These settings are not averaged out because obviously we go up or down one and we end up losing or gaining some. And then you go up just a little bit further and you see some very, very wild changes. Let's see, let's go up to 48. Let's take this up to 180. Wow. Now it takes time. I'm not saying that this is a fast process, obviously, because it's taken up like 30 minutes of this particular broadcast just showing you that changing around some of these settings on a robot can change things pretty drastically and wildly what you want is to find some settings that if you change them a little bit, then it doesn't really affect the profitability or the amount of profit or the total number of trades placed or the drawdown. The profit factor is more or less averaging a whole bunch of this stuff together in a way that spits it out in a nice, easy to read format. But it's not the most reliable source for figuring out whether a system is good or not. You want to focus on total net profit, total closed trades, percent profitability is even pretty important, and the max drawdown. None of these are more important than the others, but they are all important together. You even want to look at the average number of bars in the trade, which is usually about 1, which is pretty cool. Now, why would total trades closed be a factor? Now, most people would answer that question with, well, it's Forex, and your Forex broker loves it when you place a lot of trades. Well, sure, but if you're making money, then you like it too. You know, if you're making a considerable amount of money trading, then you like it too. And your broker likes you, you like your broker, whatever. It doesn't really matter. But if you're losing money, then yeah, your broker loves it when you place a lot of trades, and you probably don't like it as much. But that's more to do with your trading system than your broker. But on the other hand, your total number of closed trades is a factor of how often your trading system takes profit, how often it takes a loss. If you go from 20 closed trades, and I've seen this happen before, where you go from 20 closed trades up to like 120 closed trades by changing one little setting, then you know that your system needs some work, because it means that a lot of your trades have been either closing out at a loss or, well, if they're taking profit really quickly because you changed that one setting, then do some more testing to figure out why, and then, hey, you may have a good system on your hands. But, for instance, if I put this back down to 10, oh, well, that didn't change anything. Let's take this down to 50. That didn't change anything either. That's pretty cool. That means that the profit loss and the stop loss were not actually factors in how many trades were placed. Meaning we would have had this number of losing trades and this number of winning trades regardless. Now your percent profitability went down with this, but that just means maybe one trade lost when it shouldn't have, when it normally would have made money, and that's why your profit went down or whatever. But that's a fairly decent sign when you can change the profit target and the stop loss and your total close trade stays the same. Changing this around, on the other hand, that should change the number of trades that are being placed. $194. Look at that. Cool. Okay, sorry. We went a little bit longer on this than I had anticipated. Now, one of the things that I wanted to bring up in relation to this garbage system thing, but more along the lines of what makes a good trading system. Most people have a tendency to think, and you know what? I guess I'll come up on the chart this time to actually show myself. Let's see. Let's tie this and then bring that to there and auto. Oh, that's right. There I am. Okay. So a lot of people will think, and a lot of people will tell you, that the way to find a good system, a robust system, is if you can have a robot that trades the exact same settings across all the currency pairs and makes money. That's one of those myths. Now, if you ask that exact same person, do you trade the pound yen? Their answer is probably no. Or, alternatively, if they are more trading the pound yen and you ask them, well, do you trade the euro US dollar? And they'll say no. Or you ask them if they trade some of the other currency pairs, they'll say no. And why is that? You ask them, well, why don't you trade it? You know, if you can use the exact same settings across every currency pair, why don't you trade those? And they'll say, oh, well, the pound yen is just way too volatile. Well, if you should be able to use the same settings on a robot across all currency pairs, then why don't all Forex traders who have a profitable system on one currency pair, why don't they all just trade every currency pair? The answer is we all have our own, I don't know, style of trading, and each currency pair has its own style of moving. Now, granted, technical analysis and all that stuff is fundamentally good across whatever market you're trading. And it depends on how well you know that system, how well you trade it, and it depends on if there's economic type reports coming out or anything else that's affecting the market in an inorganic way. But the important part is that you have a trading system that works across multiple currency pairs, but that doesn't mean it has the same settings for every currency pair. If you ask someone how far they like to draw a trend line, or what moving average they like to use, things like that, then the answer will probably be, well, this, or it'll be that. And then you ask them, well, what about this currency pair? And then they'll say, well, I prefer, and then that's the word right there, prefer. When someone says they prefer something on one currency pair over the other, well, that's because not all currency pairs work the same. The concepts are all fundamentally the same, but using the exact same settings across every currency pair using a robot is fundamentally flawed, because you may not have, the one market may not react the same way to certain technical indicators as another. So let me give you an example now, rather than just sitting here and spouting off the exact same thing over and over and over again like I've been doing. An example would be, well, I hate to keep using it, but the handyman robot. The handyman robot works great in volatile markets, like the British pound, Japanese yen. You'll see a few losers in a row, and then you'll see one big giant winner that will wipe out all those losers, plus a whole bunch of additional, on top of that. That's great. But you try and run that on a more vanilla currency pair like Euro US dollar, and it actually loses money, because there's never a volatile enough move to make back all of the previous losses, or there's no big move that can actually take it all the way to its profit target. And so in order for the handyman robot to work on the Euro US dollar, you have to change the settings. And the settings are considerably different to run on the Euro US dollar. And it's actually not very effective, which is why we don't use it on the Euro US dollar. Okay, so that brings me to the next point about garbage systems versus good systems, and how to spot good systems, even though most people tend to think that this is an indication of a garbage system. So let me bring up a chart again. There we go. And I'm going to pull myself off the screen. Okay. We just talked about how making minor changes in the settings. Whoa, look at that. Like this. Look at this. We moved down 1. And we went from losing $100, a net loss $100. We go down 1, and all of a sudden a net loss of $7,388.50 with a profit factor of negative 322. Okay, so that's an indication of not good settings. This 21 versus a 20 is not going to actually mean the difference between making having a $100 loss and having a $7,000 loss. It's more likely to be closer to that $7,000 loss. But let's get back to the point of this really quick. If you see a robot, and all of my robots come with a variety of settings that work across a variety of different currency pairs, they don't all use the exact same settings. I use specific settings for the Euro US dollar, and I use specific settings for the US dollar Swiss franc, and I use specific settings for the Australian dollar US dollar, and I find settings for each individual currency pair. Now, will those settings that I use for the Euro US dollar still work on the Australian dollar US dollar? Yeah, sure they will. But they won't work very well, or they won't work as well as the settings that I found that were a little bit better. So occasionally you'll find a robot that has different settings for each currency pair. Just because you have different settings for each currency pair, it does not mean that the robot is not robust enough, or it doesn't mean that that robot is not very, I don't know, not a very valid system. It just means it performs better using these specific settings on one currency pair than another. So let me bring back up the settings that I had found that I slightly liked for this robot. 96, 14, 140, 14, 140, and what was that, 10? Yeah, 10. Okay, so these are settings that I found that were decent enough to look at for the Euro US dollar. Now let's change over to the US dollar Japanese yen. Profit factor went down, max drawdown went up, percent profitability went down, and our net profit went down. Now, if you're, so the thought here is, these settings still worked on a US dollar Japanese yen pair as opposed to the Euro US dollar. They both worked, but look how different they look. They are different. Now let's try the Euro New Zealand dollar. We still have a profit factor of 6.697. We still have a 31% profitability. We still net a profit, but it's still lower. It's lower. The Euro New Zealand dollar with the exact same settings is lower than the Euro US dollar. How about the pound dollar? Same thing. Those settings were optimized for the Euro US dollar. That's why they look so great on the Euro US dollar, but they don't look as good on any of the other currency pairs. Let's see if we can find one that actually loses. Well, the pound yen even works with that one. Euro yen, New Zealand dollar, Japanese yen, Australian dollar, New Zealand dollar. I didn't look at any of these other currency pairs before I actually started this webinar, by the way, or this broadcast. Oh, this is gold spot. So this actually would not be the same because it's gold. It's not currency pair. Swiss yen, CAD yen. Huh. You know what? I kind of changed my mind. I actually kind of like this system now. I mean, it makes money across every currency pair using these settings. Now, we could probably find better settings for each of these currency pairs, but gosh, that's pretty cool. And given the extremely low drawdown, obviously not on those, given the extremely low drawdown across all the currency pairs, you could technically run it across quite a few currency pairs and expect to make a little bit of money. Probably not much, but, you know, still stable. I kind of like that. Okay, hopefully I made the point on that, but let's move on to something else. We've got 6 minutes left, and I wanted to cover maybe one or two more currency pairs before we actually wrap this whole thing up. The New Zealand dollar, US dollar. Before we move to the New Zealand dollar, US dollar, let's bring that currency pair up. I'm going to take this robot off the chart. New Zealand dollar, US dollar. Okay, cool. Vantage Point Software said that we were supposed to have a bullish day, actually, because the range came a little bit lower, but the close price was down here. So the British pound, or the New Zealand dollar, US dollar is supposed to be in a bullish day, which it is, which is fantastic. It's just a lot more bullish than Vantage Point had anticipated. However, this is what I wanted to look at right here. And let me draw a circle around this. We are just about here at this peak, which is just about at this peak, which is also happens to correspond with the bottom of this trough. And if we go even further, we've got another peak, or another trough right here, another peak right here. But those aren't necessarily important at the moment. What we're looking at is this. We are here about to close at this peak. So what are we looking for now? We are looking for divergence, which we just about have. In fact, when we print this candle today, we may actually have some semi-decent divergence, although we're going up in price, and we technically are going up on the neural strength indicator. So it's not really divergence yet, but it is pretty darn close. At the very least, it's following the same pattern that we're seeing in the indicator, and that's not a bad thing. Coming down here, we see that we're about to close at this peak. That means that we're about to have a little bit of hesitation, or we're going to go up. So a lot of the times, what we see with this this indicator is exactly what we're looking at right here. We close at this peak, and then we hesitate for a moment, and then we go just slightly beyond it. But you know what? We've only still barely closed above that peak. And we stuck around right here at this peak, and then we made another little trough, and we broke that and just dropped. Now, this isn't the only indicator that you should be using. It's also not the only indication of a buy or a sell trade, but used along with divergence and some other technical analysis, we can usually make a pretty decent prediction or a pretty decent assumption about where the markets might be going. Let me make that just a little bit smaller and drag it to right here. We're about to close right here at this peak. If our next day we are able to continue our move upward and we close beyond it, then we might be able to expect a little bit more movement in the bullish direction, because we will have closed beyond this peak, and we want to trade at least up to this peak right here, the last green one that we saw. If we do not close beyond this peak and we actually reverse and come back down, then we may be looking at trading back down to these previous troughs down here. Pretty cool, right? And we'll see if that actually works out tomorrow. Tomorrow we'll do some additional analysis on the New Zealand dollar, US dollar, to determine whether or not it's actually a viable trade. I might just place the trade anyways, but we are kind of coming up here to this this little rotation point. Sorry. Anyways, let's get back to me, I suppose. And we'll go ahead and wrap up. Thank you for being here live. Thank you to David McEwen for actually talking. Is this barbecue bot on the site so we can download it to MG4 Plus, make changes? Yes. All of those robots that I made during the presentation on Monday, during all those webinars on Monday, they're all available on the Robot Continuum, Trader Continuum site. You can go there and you can just copy the entire source code and put it into the Pine editor, and you can use it all you'd like. I'm also making these robots for a couple of additional platforms, not necessarily for extended amount of use, but just because it's kind of fun. But thank you for everyone who was here live. Thank you to David for calling in, showing people that you can call in and you can text and all that cool stuff during the show. And yeah, that's it. Thanks for being here, everyone, and goodbye for now.